Good morning, everyone. So Trump does it again. More news, another flip-flop, it would seem. Uh, more tariffs driving this market, or what they may or may not do. So many different opinions as to, they're going to destroy the economy. They're not so bad. It's not a big deal. Um, so through the option expiration week, we went through a lot of noise, which ended on the, I guess, somewhat positive side, just based on that bottoming tail bar that formed on Friday. Most of it rally right into the close the last few minutes. So factory work, look to the left, S&P futures here, got a cluster of pivots right up there. And we'll see, assuming they're going to get there. It cleared these, and it has not faltered yet. Just slowing momentum as we get a little closer to the open. And look at by the dip, shallower by the dip. So as it's moving up, buyers are getting a bit more enthusiastic. You can see down here, it was around a little bit before 6 o'clock in the morning. That dip that violated the 5-minute trend, they stepped in right at the area of minor resistance, even though it came down hard and began to rebuild the base. So now this one was much shallower. So they're becoming more confident as it moves up. Makes sense. Uh, it's got room to resistance. And so we'd assume that it's going to get there unless you get a significant break of support, which would be down here since we've got multiple pivot lows. Well, that would be looking at this index, this futures contract, that would be the bias. And so 58 and a quarter-ish or so. It's this area right here on the daily where that's overlapping, and we'll see what it does at the 20, and of course the whole number. So, and it's again futures contract. It's not like SPX where whole numbers and a 20 MA have as much of an effect, and it's just we'll see if it keeps going up. So part of the tariffs was moving the NASDAQ as well, more significantly. Right at the 20, same thing coming up into this resistance area. Similar patterns. I'd say a little bit more confident, right? It wasn't as much of a dip over here. Over here, where remember 6 o'clock in the morning, just looking at the times. This had dipped earlier and started moving up, and it's continuing higher. Got a cluster of pivots there. Small caps, not doing quite as well, but held up a little bit better last week. The mess over there. So I'm just coming up. Look, well, it's got this pivot high right in the same area. So look, a couple of things, to look at when you're looking at these charts. It's like, when you look to the left there, is this the first time that something is being tested? And it would be when we look at the Qs and the S&Ps. It's got room to get there, where the Russell already tested it once. And so I would still anticipate that this would stall there, and especially if the other markets get there. What we want to see is if this Russell can hold up in that area. Everything is about, multiple time frames, support resistance trend, and what do prices do when they get to a reference point? Do they collapse? Boom, all the way down. Do they go sideways? Do we get, on the daily chart a 1, 2, 3? Does it close like this? Will it be a topping tail at the end of the day? Will it be a larger green bar closing near the high, which would suggest higher prices? So, this year has been a news-driven market, especially so since Trump became president, and playing a little havoc, with the move down, which is we refer to as a stair step move down, because down, not in this chart so much, but larger up days and then down again, and all that flip flopping that went on last week. And I don't know what's going on with his signal with this, but can't even make any heads or tails out of that. But you can see the intraday chart has already cleared these resistance and it's got room to go up. So little bit extended in the short term looking at the futures, and so we got to look at where they're going to gap to. And well, interest rates are up a little bit. So seems like everybody, well, this is moving up, but so bond prices are moving down. I'm going to say everybody's happy. Um, weekly chart, you can see right here, just flip flopping, not doing much of anything, back and forth, back and forth. So, and they look at these futures contracts and interest rates. It's day to day. Trends are down, prices coming up to resistance areas, and sellers will reemerge. So whatever the news is, and the day, each day of enthusiasm or depression um, is not violating the trend yet. So this is on major support, and I'll get to SPX in a second. Um, transports downtrend, but a little bit of a slowing momentum there. So, and look to the left. Well, so whenever you see something on a smaller time frame, meaning a reversal, slowing momentum, if you don't see anything to the left, either squish the chart till you get over there, or go to a higher time frame. So this is on a significant support area. So it's in a downtrend. Now we need to see, can it hold up here? We don't get, well, this won't even on the ETFs. We don't really get much pre-market data. But of course, the question becomes, now that this closed this way, can it take out this high? What does it do today? Everything's going to be about, okay, we got the news. There's this bullish enthusiasm here at the open. Where's it going to close? What does it do in the first half hour or so? All right, let's look at the cues. All right. So they're gapping above the pivot high. And so remember, this was the options expiration, the previous one. And then our anticipation was things could stabilize and maybe make a turn at the next options expiration, which was last week. And this was the first day that there was a close above a prior day's high. And so as we were watching this stair step down at that time, like, okay, green bar, gonna get above a prior day's high, close above it. Nope. No, 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 no. Yes. All right. So now we got this sideways chop. It's not at support. It doesn't have to be. It doesn't have to be at support to make a turn. That's the idea or concept of creating support, which this did. Now, the ideal scenario would be for it to come down here and test that, creating a stronger area of support. Anyway, it's going sideways. It's gapping up here, gapping above those pivots. And so when you have a higher time frame, in this case, the daily, that's stair stepping down, it's going to leave lots of pivots on a lower time frame, which leaves a lot of reference points for prices to stall at. So 500 whole number. Check this again. It's still under the 20 MA. It does have these pivots and minor support here. And so common sense. If it pulls back into this area, there should be buyers. In reality, it should not pull back to this area. If it pulls back to this area, it's going to be a sign of weakness, but it isn't a downtrend. And under the 20, I suspect, hey, look, there's no sign of weakness yet, so it should get a bit higher. And you've got the 50 lurking, the 200 lurking just up above. Is a bear hug over? Well, the question would imply Question is, did it have a bottom? I don't know. On a short-term bottom, but the trend is down. The trend is down. And there's plenty of losers or people holding losses up above. So, and Trump might decide, you know what? I don't like that guy's face. I'm going to increase the tariffs now. It's a tricky environment because he's says one thing, does another. I mean, overall, maybe that's his game plan, you know, and to go to extremes and then come back toward the middle. Um, so we just have to go with what is. And today it's a bullish move up after an options expiration, which was just a whip back and forth, back and forth. So we'll have to see what happens. So from a swing trading perspective, do I go long? Hell no. This isn't a downtrend. I'm frustrated with the president. Look, I'm glad for what he did, what he's doing. I'm frustrated from my own personal wants, right? Or not wants as far as the market goes. I want a market that trends in a historically normal way. And, to get news one day and then the next day and then the next day. So we all deal with our personal issues, as to, business and what we do and like that. But from a bigger picture point of view, I'm not frustrated. This is what's needed, and we need to clean house and get rid of the criminals, and that's what he's doing. And all of the garbage that's been stealing money forever, whether it was a Democrat in there or a Republican in there. So yeah, it'll change, right? Anyway, what was the question here? On the weekly of the transports, is that a wick all the day down? I'm not sure what you mean by a wick all the day, all the way down. It is just down. It was, you look at it as a 1, 2 bars, a collapse, which is this area right here. It chops sideways. When you see overlapping bars in a higher time frame, you're going to see a base in a smaller time frame, or overlapping opens and closes, which are, since I have it on a bar chart. But when you get overlapping bars like that, you're just going to get a wider trading range. And then wide range bars is a momentum move on a smaller time frame. So now momentum slowed down. And so this is what we call the factory work. And we have a method simplified from the indicator-based methodology, right? No indicators. Pivot. What's a pivot? We explain what a pivot is. Is there a group of pivots? How far away are the pivots from each other? Are they tight and overlapping? Does it trend? What's a trend? Lower highs and lower lows, higher highs and higher lows. Does it violate the trend? Does it do it in multiple time frames? All of those things are simple and easy to understand, but you have to assimilate them and then apply them to, are you a swing trader? Are you a day trader? Are you an investor? Pick your time frames. All right. So bonds are down, interest rates are up. Um, Semiconductors, probably, gapping up here into resistance. So not such a big deal. They're not clearing resistance. Just overall things are a mess. A lot of uncertainty. SPX gapping up into those topping tails on the hourly time frame. All right. So what are they going to do there? Do they continue? Do they close above the 20 and the 200? Does it turn into a bigger topping tail at the end of the day? Nobody knows. We're just going to deal with how this unfolds, which makes it for a somewhat difficult period again, or day. So it's not clearing resistance. What do? Well, I don't want it to fill the gap because it went sideways all this time. What I want it to do is consolidate. Give me 15 minutes to see a breakdown failure, and then a long, maybe up to that 20, which isn't far away. But for a day trade, okay, we'll deal with it. So nothing great going on here. Options. Let's see where things are at here. I drew this. It's been about 90 or so points, 5-day average true range. So now it's gapping up here. And so I'd have to drag these up, right? Right, that up there. And let's assume, right? So this is kind of, I'm doing this now. I haven't done it too much in the past, but essentially this is what, I'm looking at. I can't grab the freaking thing. Anyway, geez, come on. All right. So it's gapping up here. So now we say, okay, on an average day, to what extreme could it go? This is how simple it is. With people that do this SPX and trying to make it so complicated with this, you know, Varna, gate, can't even say the word, Greeks, and all this gamma stuff. Anyway, where's support? Where's resistance? What's the trend? What's the average range? Yeah, you get wild days. What are extremes? So let's call it 57, 57.90, and just put a line up there. But you could get a game plan for today here free, or you can go pay somebody $1,000 a month. Probably doesn't do it as well. 635 came up a lot, which is usually what happens when prices gap. All right. So, and this is usually the way it is. Well, look at that. It's close to the average ranges. So interesting. So gapping up here, we're going to have to see what direction this thing takes after the first, say, 15 minutes or so, and see if we get a breakdown failure or a breakout failure. Things usually aren't within the range, but I think it's unlikely to get up here. And if it continues higher, you'll probably be able to get to 5,800, which should be a no-brainer. Yeah, yeah, right. I agree, Alex. So if it can move up toward the 200, you definitely want to look to see if you can get to 5,800 or better. So that's it. Let me hand it over to Dan.
Hmm. Good morning. Obviously, I have a ton of bullish alarms going off. So we aren't going to chase. We're going to wait. But there's a lot of good looking things out there. So even if we don't trade the broader markets, as always, we can find better things. Like here's one right here, Pelletier. We're already in it. But this is a perfect ad. It's an inverse head and shoulder, multiple week turn at the 2050. Buy setup weekly in an uptrend. Perfect. So nine's gapping up, what, 250? So that's a buy on a pullback if you're not in it. Go through these alarms, don't have any earnings. Ralph Lauren, Climo, and a 3-week turn. My up alarm went off. That would have been a no-brainer put spread, but they were too spready. OPFI, Alex gave me. I like this. Multi-week turn, buy setup weekly. Bravo, Julia. These are all alarms going off. We actually traded this one here for a little pop there. And now it's a retest. Retest of that buy setup. Looks great. Sierra Golf. Bottoming pattern. Gapping up. See, I would never chase that. And I'll be going through these at the open to see how we're gonna enter these X-ray. I gave us a naked put trade. Buy setup after greater than 100%. I didn't like it as buying the stock just because it's up a lot. There's no good support here. So I said let's sell the 38 puts with a stop way down here at the 20 MA. So that I like. But we're with the gap, we're not gonna get our desired target. Affirm, making the turn at the 50. That's a put spread idea, but we're not going to get the premium. Comp. And this was a directional over Friday's high. Bullish, daily, weekly, monthly. CELH. We are already in. We nailed this, nailed that entry there. You know what? That might be at our second target. That's why my alarm went off. Let's see. Next one, third target, 33.50. You know what? Let me 30. It's not that extended. Let me change it to a 5-minute low. The next third target. 1 second. Well, here's what I'm going to do. I'm going to move it to 34.50 or 5-minute low. There we go. We have 2/3 position left. Let's see, alarm. All right. Tesla, which is the Alex, get ready. The leveraged Tesla up alarm, bottoming pattern. Let's just look at Tesla. Down over 50%, worse sentiment. Dems are going ape shit, burning up cars, and the chart says it's a bottom. I mean, it's not when I say bottom, it's tradable bottom. I don't mean to make a new high. But when you that's another good example. If you're one of these Tesla penultimate bulls, kind of like Scaramucci with Bitcoin, and you're looking at this weekly chart, you might say, what the heck happened? How the heck did Tesla get cut in half? Did they outlaw electric cars or what did they do? But you look at the daily weekly and you ignore the friggin' news. You ignore it, and there's your daily weekly alignment to buy it. Yeah, oh yeah, thanks for reminding me, Grammy. We only have one short in the advisory letter. It's KHC, and this was actually gapping down. So I had moved the stop to break even. Thanks for reminding me because I didn't post it in here. The room was late opening. Yeah, we do have two bear call credit spreads. IWM on this gap down from a sell setup. I got my alarm there. It's still not gapping over the alarm. So ideally, how we're going to handle that is get out on a pullback at the point in time where we would be interested in buying IWM, and then close the call spread. Daku. This in the weekend letter, gap over the bar. I've been watching this ever since this gap up. And based on Friday's close, I said, now it's ready. Arc G. Wow, I haven't set alarms on the arc lady in a long time. The up alarm going off. Arc lady. Well, yeah, Robert, she actually passed like a year ago. Yeah, a while back. TTD, piece of garbage we've been in, up alarm. I think this better not take out these lows now, or something's already seriously wrong with it. But all right, Delta Leah is a Climo. Up alarm went off. There's still a number of Climos on the airlines. Look at American Airlines on my list. ALGT, UAL. These are all Climos. And that's it. So those are, oh no, one more. SMC alarm went off. I can type. So this was a put spread. No, actually it was I think it was both actually. I gotta go look. So a nice W retest here at the 2050 buy setup weekly. And I like the fact that it's down. It got a downgrade. Why? Well, because then, I don't have to deal with an excessive gap and it'll be bullish if it negates the gap down. So then that will be a clean hit. And those are all the alarms. OPCH. It's up 4 bars, but it's bullish consolidation at resistance. It's bullish weekly, monthly. So it definitely is a watch. It looks like there's one print up here at 35.50. So it's gapping up $1. So like many things, I would say look for controlled 15-minute pullback, buy setup things. All right, what miscellaneous stuff do I have here? Greg mentioned transport. This is not a W bottom, but it's what we just call a retest then, because it doesn't have the symmetry. And I did look at that for put spread, but it's just most ETFs are ridiculously spready. I'd say there's only a half dozen that are like SMHs are the best. They're tight, they're juicy. Some of the oils are good. I just saw this going by the ticker XHLD. Looks like a recent IPO, or maybe it got delisted or whatever. I don't know. But that thing blasted. Garur, a big gap at the resistance, possible put spread. I just saw in the journal about Turkey banning short selling. They've had some problems with their elections and so forth. Alex gave me this CALF. Control pullback, or if it closes like this. This is a index ETF. URI alarm. The URI pullback. White House alarm. Alex, your White House. Nice gap from a retest of a Climo. That looks great. But market's coming in, so I'm in no rush. But yeah, it looks good. OPFI. All right, so OPFI will just Get a pullback here. Oh, Don, that's not, that's actually what we want to see because it's excessive. It's bullish, but excessive. So the easy case, wow, look at tick 1300. The easy case is a controlled 15-minute buy setup. The more difficult case, as the thing doesn't want to retrace, and then you gotta, buy high with a bigger stump. All right, this OPFI, we can go ahead and let's buy in this pullback here, 05. Hold on. OPFI. Yeah, it's okay. Can buy it. Just buy it at $10. 'All right, this SMH alarm went off. It's 9:34. Let's give it the 5-minute high rule. ACHR. Well, yeah, it's right at that prior high though. That's my one. I can find better. Archer alarm, or that's retest pattern, 5-minute high. EFXT is a clean alarm. So that's good to go. EFXT. KMI alarm.
Five-minute reversals on Apple and Microsoft and Google,
KMI was a clean hit.
Netflix. And they came out of end of day bases. So that's, well, nothing was moving for the most part until the end of the day, where those things based on the options expiration skewed things.
URI gap and go. So yeah, bottoming pattern. Maybe 30-minute high, just not sure how far it's gonna go. I actually had a naked put on that last week that I killed break even. Let's see what 9.5s are now. 18 cents. And for the 9.5s. Yaku pulled in to the area. All right, now IWM alarm, Greg. But that's after 5 minutes. Yeah, we gotta kill that one. That looks bullish. 208, 212. It was a clean 5 minute high hit and it looks higher. So Greg, unless you have another management, it looks higher to me, and I don't have a new plan B.
That's credit spreads. Technically, it's garbage. So whether it stays below there or not, I don't know. You cannot manage credit spreads like you do directionals. That's unfortunate, but well, you can do whatever you want, of course. But you know, if you look at the 65-minute, it's coming up into the pivots, which you don't know. You don't. There'll be sellers up here. Sure, probably. I don't know. Sometime this morning, how far it retraces or the lack thereof is the unknown. And with a credit spread, I mean, it's not above your strike, but and it could go a bit higher. Maybe 209, whatever. But and that's what they call it, the hard right edge. It could be a 206 or lower by the end of the day. If you have multiple contracts, peel off half of them. You had a triple witching last week. You got news driving this market, but the trend is down. Credit spreads are credit spreads. You deal with them as you have to.
Well, we both, well, we're in a lot. We're in agreement. It's in a downtrend, but with that big void, we both know that counter trend rallies can be vicious. So we're talking about managing losses on shorts and looking for bullish patterns to trade the bounce. Yeah, this looks good. ILNQ.
I'll expand on the credit spread thing. Credit spreads, as you know, are just a simple bias. I don't think prices are going to go up there or down there. And if they stay sideways, wonderful, right? If it's a bear call spread and it goes down, even better. So you can put on positions based on patterns like a bear call credit spread because you don't believe prices are going to go up to a certain level by a certain time period. Whereas I would not, right? I would not be buying this, right? As a directional. So they're different animals, and you have to trade them based on that particular instrument. And as I've said this a gazillion times, you have to trade credit spreads very defensively, like scared money. And that isn't to say it in a derogatory way, it's what the instrument dictates because of the reward to risk. And that's the way it is. So you have to err on the side of, well, I have to control losses, which is always the case. But even more so, Whereas if you put yourself in a position of, well, it's at resistance and I don't think it'll do this versus your money management, sooner or later it's going to bite you real hard. So accept what you're dealing with and what comes with it. So as I look at IWM and coming up on that 65-minute chart, it does look like a bottom. Now it's a different view versus the daily. But what is it going to do with this resistance area? If it's hanging up here, at 10:30, things begin to change. Now, I still not going long from a swing trading perspective with this pattern, but I start thinking about, intraday, and this is not my wheelhouse. I think Dan likes to use that for an intraday trade. So I want to see what this is going to do. But if it can hang up here for a while, and more so maybe even a day, because now it's got a big gap, open gap below. It's going to take a little time to digest this. Yeah, Bally, I'm going to put up my charts. I had a little tech issue this morning, so I got a late start, and I have to close down my e-signal and move over to the other computer and open up charts that I usually use over here. I'll do that shortly.
Yeah, KMI hit for Liberta. Yeah, I like it. Yeah. I mean, a day trade for sure. It's coming out of a nice base. That have triggered.
All right, I put them up, Bally. So on social media, I think what happens is when I put mine, or I guess whoever is the last one to put them up, my charts go up and take Dan's away. So whatever he's talking about, just confirm that for me anyway. Um, and hold on here.
Yeah, looks great. CELH just made the next target. Looks great. Little stuff. 3268.
So the two credit spreads, see what they do by the end of the day, but I picked that topic to write about in this chart of the week, which, credit spreads are, people refer to them like as a insurance company. It means if you're a credit spread trader, you need to do credit spreads. And other than zero DTE, which is much simpler, uh, but you have, you know, you have to be doing them and managing them and controlling risk like an insurance company. Meaning, look, at sometimes there's going to be disasters. Thing is, with credit spreads, unless you get a horrendous gap against you, it's about controlling the disasters. You can see I'm now moving my support resistance lines. Those pivots that prices cleared theoretically, right? Ideally, from the bullish case, pullbacks into that area, they're going to hold there.
Yeah. Yeah, looks good. Yeah, Pelletier looks great. We're already in it. GoDaddy, yep, I love it over the high. Check puts too. And we're in this one too. GoDaddy 177.50, 60 by 105. Wow, it's 100% spread. Sierra Golf. That was good. Open. All right, comp into the gap. It's good to go. 940.
Thomas, that GE breaking, it cleared those highs, but look at the resistance to the left. That would probably be good for a put spread if there was premium down below. Or, you know, I mean, pretty much any of these things, if they hold up, I wouldn't buy any kind of breakouts here. You can buy pullbacks, you can buy shakeouts, but especially, what's the reward to risk on a GE? Where are you going to put your stop? I don't think it makes sense if you're going to swing trade it to put a stop under today's low.
Cool.
Chow, scalps always, you can do scalps. How do you do them? What are you going to do? Same thing. Pick your time frame, your intraday time frame, buy pullbacks, continuation patterns, look to the left. Where's resistance? Is there room to run?
Delta doing better.
IBM taking out the high of the day. I haven't looked at the other time frames. That's chopping down. I got a thumbnail up. You can see my 5-minute chart. It's a little breakdown failure. But for a day trade, that's a good kind of a pattern, right? The other time frames suck. I don't think there's any news today at 10 o'clock. Right? No, there's nothing.
Nice octa core long. We have covered calls. CDS rocking.
ticks have pulled back to the zero line from the open, and the market's trended higher. Oh, there's a plus. Let's see what they do. If they flip up, they should flip up here. You can see them, my 5-minute chart down here. So Amazon looks good, Thomas. Again, it looks like it's made a bottom. These kind of patterns are good for put spreads. And I'm going to drop this link in here because until everybody gets acclimated to what we were asked to do, or
Right, I tried watching this morning and I got an
no,
error.
I'm not talking about that, Dan. It worked for me anyway. Probably your internet or whatever. I logged in there. It worked. I'll share that with the room later. But as far as typing in symbols, Dan and I can't read your mind. But so when you say Amazon looks good, it's like, okay, yeah, it looks good. It's moving up. 5-minute charts moving up. If you're day trading, I wasn't looking at it, but look, it's for this is the kind of pattern that you want to look for. Red bar ignored. It's coming out of a base. And I think any of these fangs, maybe not Netflix, should be good for put spreads this week.
Yeah, I just looked, Amazon wasn't enough. But yeah, I mean, yeah. What about mags too? Not enough.
10 o'clock reversal period. Let's see what they do. The last 3 5-minute bars have little tiny candle bodies. AM Ray AMD looks like a lot of things, making a bottom in a downtrend, and a significant gap up. So what do you want to do with it? I mean, any of these. I'm just talking generality. Almost any of these patterns lend themselves to put spreads. And then the factory work is go look at the strikes and the premiums and the time to expiration. but it's gapping up into a declining 50 MA. There isn't a significant price resistance there. So, weekly charts in a downtrend. So, again, what do you want to do? I don't want to buy it. It'd be foolish to buy this. If you own it, you'd probably want to start thinking about a covered call, like above the top of that pivot if it had premium.
You can't get enough good credit on Meta either. Just 240s. $0.35. AMD is usually juicy. Let me try 105. Nope. So that's the problem. Yeah, there's patterns are there.
It'll pull back. This is a good example if you can get Alex to help you out, Dan, with this 200 MA. If it was just based on prices, you wouldn't see it.
Mm-hmm.
Scaling, that is.
Yeah, he'll have to tell me again because I did exactly what he told me before.